Next up, we're going north, geographically. We're going to talk about Wall Street and the role of on-chain finance on Wall Street. Please welcome to the stage Yoni Assia and Ian Allison.
Hello everyone. My name's Ian Allison. I'm a reporter with CoinDesk, and I got my anniversary the other day. I've been there for 8 years, which I guess makes me OG of crypto reporting. But what I've got here with Yoni is a original crypto OG who's been in the space for a long time.
15 years now in crypto.
You deserve a medal. I think before we get started, you've got an announcement you'd like to share?
We just announced we acquired Zengo, a non-custodial wallet, an OG non-custodial wallet. I don't know if the CEO is here as well, Uriel. So very excited about, again, the convergence, which I see here a lot, across between DeFi and TradFi. And now we're basically accelerating our path into DeFi with the acquisition of Zengo, bringing a lot of crypto-native, DeFi-native customers into the eToro ecosystem.
Very nice. And price not disclosed?
Not disclosed.
Off the record?
No. Yes, this is off the record.
Well, before we really get into the TradFi convergence narrative, I just wanted to ask a bit about, this market and where we're at just now with this kind of weird, flat, low volatility market. And I know in your recent results, you were saying, look, we've got this. Obviously, we're not just crypto, and we've seen people moving in, trading commodities, trading gold. Cryptos, people are doing a lot of units, but not as much. Do you want to talk about the market generally?
Well, generally, this is our fourth in eToro crypto cycle, right? So we launched Bitcoin on eToro in 2013 at the peak of that crypto rally at, I think, $1,300, and then it dropped in 2014 to 150. Then we had the rally of 17 with a peak in October of 17,000, dropped to $1,500 in 2018, the peak in 2021, then dropped in 2022, and now the peak in 2025, dropping in 2026. So I'm actually a believer that the crypto 4-year cycles are a bit of a self-fulfilling prophecy. They are, amazingly consistent. Right, so you have the halving, then you have the rally, then you have a bit of a correction, and then it continues, and it looks like a clock. So I think a lot of people and OGs are sort of following a bit that process, and that actually leads to that self-fulfilling prophecy. And from that point of view, I think we have maybe another quarter of lower volatility before things start to pick up, and then to see all-time highs, right? So here in the crowd, I don't need to say that my views is, of course, this is only a bump in the road, and Bitcoin is on the path eventually to $250,000, $500,000 and beyond. I assume everybody in Blockchain Week are crypto bullish. So I think the biggest difference between this cycle and maybe all other cycles before is that today it's amazingly clear that Bitcoin is here to stay, and that crypto is here to stay, and that blockchain is here to stay.
I mean, I think it's interesting when you say like 250,000 Bitcoin price, because if you'd asked me or if asked someone during the Gensler years, hey, look, imagine the next administration in the US, there is a president who has a framework for crypto asset regulation. Not just that, he's actually got a meme coin. What price would you think, Bitcoin might be? And I think people would say, oh, it's going to be 200,000. At 65 would probably not be the number that a lot of people came up with. I mean, I guess stepping back, the question would be, is this current administration been good for crypto? I mean, in your opinion?
I think this is by far the friendliest administration to crypto the industry could ever expect. I think both the administration, but more than that, CFTC and SEC are saying very clearly that they want to see the US leading in crypto markets and blockchain markets. But it's even bigger than that, because what they're saying is what we've been saying in the industry for many years, which is capital markets are going on chain. and US capital markets are going on-chain. And if you think of the entire world of tokenization and what hinders it or slows it down, it's regulation, right? So banks, if you can't have the right regulation to connect real-world assets, whether it's tokenized stocks or private equity or secondaries, if you can connect them into the blockchain in the right way that people can trust, then it's very hard for those markets to actually emerge and scale. MiCA was very significant for that process in Europe, and I think various regulations right now in the US are paving that path for the US. One of them, for example, is the SEC permissioned the DTCC, which is the clearinghouse of the US, which has $100 trillion of assets, to start actually moving real equities, real treasuries, real bonds on-chain. And that's the path eventually of converging crypto markets and capital markets. So we're seeing, I'd say, very first stages of tokenized stocks, of perpetual futures on decentralized exchanges, suddenly on gold and silver and oil, same contracts that historically were part of regulated capital markets. And I think because of US administration, very clear sort of statements around crypto, we're seeing a lot of changes in everything moving on chain.
Well, you are also a tokenization OG. This company, Firmo, you guys acquired in 2019. I suppose the question would be, what do you see has changed? I mean, you've already started getting right into it there. Maybe dive into the hurdles, vested interests, things like that are difficult that have been ironed out.
I think the biggest hurdle has always been regulation and the fact that, crypto is global, right? So the real benefits of crypto versus all the traditional capital markets, it's 24/7, it's global, it's transferable, and regulation actually, even when it's approved in one place, it still has a challenge of how does it move to another place, right? So you can tokenize SpaceX stock, but then the question is, how is that regulated in the US, in Europe, in Asia, right? Because regulations are still local. So I think the issuance part, again, in MiCA and in some countries, whether we're regulated also in Singapore, in Abu Dhabi, in the UK. So we're seeing a lot of very positive advancements into the regulatory environment to be able to issue tokenized stocks, but how are they tradable cross-border are still open questions. So I think these are the big hurdles, and of course you have to have liquidity. Right, so you can tokenize something, but if it doesn't have liquidity and market makers, and it's not listed in multiple venues, then the benefits of 24/7 and transferability are still not there. But I think this is like, I think I had this aha moment when I was trading on a non-custodial wallet, suddenly perpetual futures on Tesla and on actually regulated stocks that are suddenly on non-custodial wallets, and I think that's the beginning of that convergence of DeFi and TradFi. And we've been talking to, all the large lenders like Morpho, like Aave, about how can you take tokenized stocks from eToro, for example, and put them as collateral so you can actually leverage them in decentralized finance. And I think that is going to be a very interesting path for new usability of tokenized stocks.
Is that happening?
Again, very early stages, again, of how can you tokenize real-world assets on top of DeFi protocols.
As collateral in DeFi, because you're in beta right now with the...
Yes.
And, yeah, go on.
Yes, so first of all, transferability of stocks is a big issue, right? So if we look at our crypto-native customers, a big part of everything people do in crypto is constantly move crypto assets from one place to another, and we're all used to transferability being real time. Where in stocks, when our customers are asking us to move stocks from one place to another, even into eToro, which obviously we love when customers are bringing their stocks into eToro, it's really a horrible process. It's like a week to 2 week process where you have no idea where actually the stocks are for a while. So I think that's the first thing that tokenized stocks solve is transferability of stocks between brokers, enabling basically the same experience of crypto. The second part is 24/7. So we're actually now looking at the convergence between decentralized perpetual markets and centralized markets to actually feed 24/7 markets. So when you think of your crypto native, people who came into crypto, and we see a lot of those in eToro, so people actually start trading crypto before they actually start trading stocks. And their expectations, usually younger audiences, is that their assets should always trade 24/7. So we had that shift, which actually was surprising to me how fast it was, the move of US stocks to trade 24/5 last year. And now we actually started opening up 24/5 in gold and oil and silver, which actually we saw a lot of crypto native customers who came into eToro to actually trade crypto, actually shifting because of the low volatility of right now Bitcoin and ETH and the rest of the crypto industry, actually shifting to where volatility is, which is gold and silver and oil right now. And those markets were shifting to 24/7. The way I say it is that what we're seeing is capital markets right now are actually copying crypto markets. So because the expectations of younger generations is for everything to trade 24/7, then the markets are actually going in that direction.
It's a really interesting kind of cultural point that I haven't really thought about. I mean, I like this idea that you've been doing this for a long time, very thoughtful, not rushing into it. These spot quoted, you're also on the derivative side, you're working with the CME spot quoted. Do you want to talk a bit about that product?
Sure. So eToro was a big OG coming from TradFi into crypto. So we launched Bitcoin trading in 2013. We had to talk a lot to regulators about what is Bitcoin, how do you custody Bitcoin, what is crypto when we launched new assets, how do you list new assets. But we've always been first a regulated securities firm that then added crypto into it. And that's also a part of the acquisition now of Zengo, of buying more crypto native companies, bringing in a crypto native audience into eToro. So what we're seeing now is, futures by definition enable leverage trading on top of crypto. So you have the listed futures on the listed European exchanges or US exchanges supported in eToro, and then you have the emergence of perpetual futures on decentralized exchanges that used to be crypto only, but now are starting to actually support also non-crypto, whether it's gold, silver, oil, or whether it's stocks, right? So leveraged non-crypto trading on decentralized exchanges, and those are actually feeding now centralized exchanges like the CME or like MTFs in Europe.
Which DEXs? What, like Hyperliquid and stuff?
Yeah, Hyperliquid, Astra, Extended. So many of the popular DEXs are now actually launching non-crypto derivatives on top of them.
Well, we are right on the money of convergence of TradFi and DeFi right there. I wanted to talk really briefly about MiCA, and you guys are SciSec regulated, you're in Cyprus, and with regards to structured products and derivatives and crypto derivatives specifically, right? There was an intervention about a month ago from ESMA, this is the European federal sort of regulator. I mean, I get the feeling that this was calling out some people some firms who've maybe rushed into this a little bit. Not asking you to name names, but I get the feeling that that's what's happened. Just like you guys have played by the rules, I just wondered how you feel about, you've got all your disclosures, etc.
I think eToro, always plays by the rules because, again, a big part of our business, bigger than crypto, is regulated securities. So first and foremost, we're a regulated financial institution. We want to make sure that everything we do in crypto historically doesn't risk our non-crypto business. Crypto native companies historically have been much more aggressive, especially in places where there were no regulations. I think regulators are catching up. I think the benefits to consumers are very clear. The interest of consumers worldwide in crypto are very clear. In many countries, by the way, customers are more interested in buying crypto than actually buying local stocks. So that's a big shift for any government, any regulator to realize that. And again, I think the fact that we see regulators realizing the benefits of tokenization, of new types of asset classes coming on chain, also realize that they can't prevent innovation and that they want to actually support the innovation coming from crypto markets, which again, in finance, it's all eventually about capital formation and price discovery. Prediction markets is another very interesting new product of price discovery, and you have the same sort of prediction markets that are on-chain, right? So Polymarket that started on-chain versus Kalshi that actually started as a regulated product by the CFTC, and both now basically are converging with many more prediction markets that are coming into the markets, and that's actually coming from the US right now, right? So that's all a very US-based business that actually is going overseas.
With this wallet acquisition, are there any prediction markets in particular you can talk about that you're working with?
When we look at sort of the convergence of DeFi into TradFi, we're looking into swaps, so enabling our customers to go into suddenly 1 million different tokens versus the 200 crypto assets today. On eToro, we're looking into lending markets, which again, on eToro, you can leverage and you can lend your stocks and stake your crypto. But in DeFi, lending is different, right? So it's DeFi lending like Aave and like Amorpho and others. And we're looking definitely at decentralized perpetual markets and prediction markets.
Just briefly going back to this ESMA point, I mean, if ESMA and the French, let's just say, start throwing their weight around and saying you can, 10x is not allowed, whatever, leverage, does that worry you guys with what you're doing?
No, I think, we've been trading at both, traditional stocks and crypto, which is the vast majority of assets of the $20 billion on eToro, right? So the vast majority is just people sort of long and hold stocks in crypto, but we've been offering leverage on crypto basically since 2013 as well. And we've been offering leverage on stocks since we started stock trading as well. So I think for some users, they actually are interested in leverage. Leveraged in TradFi has been capped long time ago. So, for example, stock trading is capped at 5-time leverage. Currency trading is, I think, capped at about 10-time leverage. So I think what the regulators are saying are that the same rules that apply to traditional leverage on the markets should also apply to perpetual futures potentially.
Really nice. I mean, the reason that I bring that up about Mika and ESMA, et cetera, is because if you talk to people, small casps in any number of European countries that have been waiting on registration lists to get some sort of a nod, the numbers are high of how many of those companies are going to fold because they just can't afford to have compliance teams. They're not. I mean, it's great news if you're eToro or OKX or Kraken or someone. You can just buy these companies. They want to be acquired, but their hands been forced by some quite arguably onerous European regulation. I mean, that's bad for innovation in Europe.
The cost of compliance and regulation, especially if you work globally, is significant. We see a lot of great companies. We're looking at other companies right now to acquire with local regulations. So again, we saw this in previous sort of crypto corrections or winters as well. Many companies invest during the rally, so they actually expand into a lot of different jurisdictions, and then they realize that the burden and the cost of actually expanding too much is too heavy, and they need to either basically merge with another company, converge to a bigger ship like eToro, which is actually why we went public. We went public because we thought that there are going to be a lot of opportunities to bring great teams and great products to our customers eventually globally in eToro. And I think there is going to be consolidation in the market because, again, a lot of investments have been made into the crypto industry, into a lot of similar-sized companies that are subscale to eventually stand on their own. And if the crypto sort of correction stays for a while, I think we are going to see great consolidation, inviting people here to send us their decks if they want.
send the decks. We're almost at time. I wanted to ask you a last bonus question. I read somewhere that you guys, as well as being OGs in 2013, you bought Bitcoin at $5 or something like that, but you maybe sold some of it. Do you mind me asking how much you bought?
No, so first of all, it's eToro bought, and we bought about, I think, 3,000-4,000 Bitcoin back in 2011-12. But that actually fueled a lot of the growth in 2017-18. So when we actually grew in 2017-18 from $50 million to $250 million revenues, one of the reasons we were up and running while most of the crypto shop actually closed during the rally then is because we enabled basically customers to actually buy our own Bitcoin, and after $50,000 became about $50 million, the board forced my hand to eventually sell those Bitcoins into dollars.
I wish I'd done that. Well, thanks for being such a good sport, Yoni, and big
Thank you very much.
Thanks.
Welcome to Signal Week.